think both these counters, fortunately, in IT companies, he's made a very strong kind of margin of profit. My suggestion is that at least 50% of these profits should be booked out, because I think the clearly the IT sector looks to be headed for significant headwinds, at least for the next 2 to 3 quarters. And this we have already seen in the results of most of the larger companies like TCS, HCL Tech. My sense is that in the near term, there is unlikely to be any short-term re-rating for these companies, although long-term fundamentals remain intact. So I think 50% he could book out profits. He could look at some other emerging sectors like private sector or PSU banks, capital goods, or maybe real estate, which possibly could offer him a better risk reward. So 50% he could book out, and the rest he can hold on for the longer term. No, I think as far as the next 3 years is concerned, Srishti, I think Saregama definitely should do well, considering that they have a large music data bank. They also now are getting into movie manufacture making, as well as obviously they have been also been very strong on the OTT segment. My sense is that margins in the previous quarter were slightly disappointing. So the markets were quite disappointed. But if you look at the kind of capital structure of the business, this is a debt-free business. The company has got about 1,000 crores of cash on the books, and demand continues to grow steadily. So I think considering that it's a market leader in this space, if the investor has at least 2 years plus kind of view, I think he can definitely even add at the current level. But I think he needs to take a long-term view. In the short term, the stock could remain range bound, but in the longer term, yes, the risk reward could be significant.
All
I
right.
think if she's held on for a long time, I would suggest if she can hold on for the next 12 to 15 months. I believe that post the good monsoon, rural market demand could possibly give a big spike to Colgate India demands kind of scenario. And more importantly, it's a brand-driven business, a very asset-light kind of business structure. So I think if investor can hold on for the next 12 to 15 months, I expect margin improvement as well as a very strong volume growth pickup in the next couple of years. And I think a lot of new products are also on the table. So that would further kick in the volume growth. So I think it's better to hold on. This is a blue chip, and within its space, it's a market leader. So I would believe that growth would definitely review, but investors should take at least a 12 to 15 month view and continue to hold on. Think even if the investor has a 12 to 18 month horizon, I think he should continue to hold on. See, this is a company which is into the digital space. They've got clients like Netflix, Amazon, and I think clearly in terms of the growth trajectory over the next 2 years, they've got a fairly large order book. But in the very near term, there's going to be a lot of volatility in the fintech space. So I think if the investor has a medium term view, roughly about 12 to 18 months, then only he should hold on. I would suggest that if you can even average at the current odd levels and keep a 12 to 18 month view, that would be a good strategy, but only considering the long term view. In the short term, there are unlikely to be any major triggers. As I mentioned earlier, there are some headwinds in the IT space, and therefore the next couple of quarters could be slightly weaker. So one needs to keep that in mind. So I think my sense is Siemens is an MNC counter, and I think looking at the kind of GDP growth plus the kind of government spending on infrastructure, I would believe that this stock can definitely deliver positive returns, provided one can wait for the next couple of years. The stock is not cheap; it's fairly expensive. But I think looking at the kind of order book and the kind of growth trajectory, especially not only the domestic but in the export markets, Siemens can be a very good risk reward kind of bet, provided the investor can hold on for the next couple of years. So I think in the short term, the stock has already rallied quite significantly. One could not expect a significant risk reward here, but longer term, yes, I think a lot of money can be made. So I would prefer that he should hold on. Any buying should be done only on dips. I think the stock can correct, and if it corrects, then I think one should definitely buy on dips here. Cheryl, Intellect Design is a SaaS company, and I think in all cases, SaaS companies make very good margin from their product revenues. And Intellect largely deals with the financial services, with the banks, with the treasuries, and the insurance companies. They've got large clients in the US market. Overall, I think the first quarter numbers have been quite encouraging. And despite headwinds in the US markets, they've got a very strong pipeline of these product customers who actually have patronized them for a long time. So I think if the investor has a 12 to 18 month time frame horizon, then I think one could definitely look at it. Incremental order business is coming at a slower pace, but existing business is giving them enough fuel for generating a good amount of revenue. So current levels, he could think of buying only if he has a 12 to 15 month kind of time horizon. Very good margins and very good scalability potential. So longer term prospects are good, but yes, in the near term, the stock could remain sideways. Manipra seems to be a good bet. I think considering the fact that it's got a significantly good order book, and I think in terms of the EPC as well as the residential property development business, they've been doing very well. In fact, the order book is at least 18 months odd. And I think looking at that kind of visibility, the company should post a reasonably good profit in the current year. I would believe that even at the current odd levels, if the investor can hold on, he could expect a target price of around 190 to 200 in the very near term. So I think Man Infra would be definitely be better for a short to medium term. I think, Shristi, as far as the fundamentals are concerned, this is a company which enjoys a large market share in the cable and wire business, and almost all the companies in this space have shown very strong numbers. My sense is, the stock has corrected because there have been some reports that there has been some reports about infighting within the family members, and I think the court has restrained, this Deepak Chabria from contending the managing director's position. But I think that got sorted out. So I think this is more to do with sentiment rather than fundamental. So I think if the investor can hold on for the next 6 to 12 months, the best part is commodity prices are ruling soft, order books are running very high. So I think you could see a very strong second half of FY24 also. So I think continue to hold on and don't panic. I think the stock could definitely get re-rated in the coming 6 to 12 months.